Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 22nd of December. All right, we're stepping closer to obviously the holiday break, but let me just tell you the markets are reacting extremely well to the fundamentals. Right, Canadian retail sales numbers slightly better than expected, and I'll show you the chart in a second. Dollar CAD kicking to the downside, right, and it coincides with this Philly Fed Manufacturing Index minus 10.5. The US GDP numbers slightly lower as well, gives us a weak dollar, right? And then you've got the strong CAD numbers. So when I show you the charts here, you'll see, or you should understand why dollar CAD is lower. You've got both aspects of that pair moving down. Now, the dollar, and I was saying this sort of yesterday or the day before on my last update, the dollar trend down is not over. It's still in play. I mean, we've just sort of been treading ground a bit as various key numbers come out from, say, the UK, Canada, etc. But the dollar is going down, and you're starting to see euro starting to budge higher. Sterling, well, we had those weaker UK inflation numbers, so it's sort of dancing there. And this is where today's UK retail sales and GDP numbers will come into play, right? We get slightly stronger numbers there that counteract that weaker inflation number, or sterling rallies. If those numbers are weak, well, sterling's probably going to drift lower, but it will depend on the US numbers. Aussie and Kiwi look like they are setting sail for much higher levels, right? So when it comes down to today's trading, let me just get back to the calendar here. It's super important, right? Because we are about to go into the sort of Christmas, New Year period. And that, what I mean by that is, if we get consistent numbers here, like sterling, well, we've got those weaker UK inflation numbers, so that sort of clouds the picture here. But the US dollar, in particular, these numbers here, the really high impacting numbers, they have a chance to set the tone for a trend to roll out over probably the next 2 weeks. All we need is the PCE price index, or these numbers themselves, is the consensus, to come out weaker than forecast. If they are weaker, the dollar will just naturally go to the downside, right? And over the holiday break, there's no sort of key numbers to really shake it out of this. So all we need is weak numbers. We should see the dollar trend lower over probably the next 2 weeks, right? Leading into the US non-farm payrolls. And that means equities higher and clear trading markets. So you know what? This Christmas break, the best present we might get is weaker US numbers, and that's going to give us plenty to trade. You can sort of jump in here and there. Now, the tricky part about that is obviously Boxing Day is a public holiday. Christmas Day, the Japanese market is open, but a lot of brokers turn off anyway. So just check your brokers. Our team will be sending out an email to all of our database telling you about what trade times the markets are open. So now, if you have a chance and you are in front of the screens, right, as I said, this the opportunity around these numbers here at the moment today are very tangible, right? Like it's been a while. If I can just get the trade tool up, like these numbers here, as I said, have a chance to set the tone for the dollar going forward. So if you've got if you're up cash for the week or up cash for the month, there might be a chance here to get into a good trade if we see the opportunity. What you need to do is pick the instrument you need to trade. If you're trading the currencies, I'll tell you what, euro has got a lot of built up tension. It's ready to pop, but it needs a push, right? Sterling, well, mid-range, it's probably not the best. Aussie and Kiwi will freely move to the top side should we get weaker US numbers, as will dollar CAD. It will move to the downside following those stronger numbers out of Canada yesterday. Dollar yen, I'd expect that to sort of drift lower with the weaker dollar sentiment. Dollar Swiss, this is the one that sort of is probably the true dollar trade. You can see it very clearly, like the dollar index. Weaker numbers, it's going to keep moving to the downside as well. Of course, there are short-term trading opportunities should these numbers come out strong. But you know what? All the data's been weak, so I can't really see it. All right, guys, that's pretty much a wrap for me. I'm not going to be trading too much or doing any updates probably till the first week of January. All right. So everyone have a good Christmas, New Year break. We'll come back into 2024. We're doing a major reshuffle and restructure of our pro education program. It's going to be a bit of an eye opener. So maybe look out for that. And we've got a bunch of other technical things coming online, like our market analysis screener, which I'm sure is going to really light up your trading, because it's going to give you live, detailed, technical and fundamental analysis and trade signals. That's to look forward to in 2024. All right, guys, that's it from me. Have a good one. All the best. Cheerio.